Good morning and happy Friday. Not only happy Friday, I'm going to stick with happy news today because there's a lot of really good news happening both in the real estate and mortgage markets. So let's celebrate and share some happy news today. Now, of course, the employment numbers were in. They were fairly neutral. They're not going to push the Fed one way or the other, but they'll allow the Fed to do whatever they want to do. So relatively good news. We don't want the numbers to be too weak, and we didn't want them to be too strong. So we got the Goldilocks that we wanted. Now, here's what I'm talking about. Good news today. I'm going to cover some data in the Mortgage Monitor report, September's 2024 from ICE. And if you don't follow this report, you should. It is chock full of great data. 23 pages of great data. I don't really pay attention to the data on late payments because that's negligible today. I do pay attention to interest rates, product mix, the average turn times, the various amount of stuff. So, and we're going to cover in the middle here. There's a really interesting section. In the middle section is called interest rates and lending activity. And this is where we're going to share a lot of really, really good news. Let's start with rates dipping down to 6.5%, probably lower where you are, but around 6.5%. As of August 22nd, as of 2 weeks ago, there were 2.5 million homeowners that were in the money for a refi, for a rate and term refi. So 2.5 million homeowners could benefit from a rate and term refi. And what that's with people that had over 20% equity in their home, over 720 FICO scores, and could improve their rate by 75 basis points. So by about 3/4 of a point. 2.5 million homeowners. Now, I'm gonna get into some more really, really juicy numbers with this, but that's a great headline number, right? It's a really good headline number. Now, here's the next thing. Rate and term refis are starting to increase. If you go to this report, I put a link to it in my show notes, and I also did a LinkedIn post early this morning, where I summarized the numbers and gave a link to the report. Go either way. I think you probably get better if you go through my LinkedIn because you get my feedback on the data. But either way, you can access reports. So I'm right now looking at page 8 of this report. I know that doesn't help you. I'm looking at a wonderful chart that shows refinance locks, rate and term versus cash out. And they're about 50-50 right now. They're about 50-50 with rate and terms almost up 40% from previous months as a percentage. But it's not quite 50-50, but half are rate and term and half are cash out refis. So that's great news. Rate and term refis are back into the market. That's so good. Now, I'm going to share some other great statistics, all right? And here, I'm just going to share random stuff, and I'm going to look at the report, so I'm sorry if you see my eyes darting around. I don't want to misquote these numbers. But of the 2.5 million people that are in the money, 60% of them have taken out their mortgages in the last 24 months, including 850,000 of them in 2023 and 560,000 this year. So they're very recent vintage. They're highly qualified. On average, they can save $264 per month by refinancing. So these 2.5 million people can save $264 a month by refinancing. Man, let's get out and find those people. There's 2.5 million people. We got to help them save $264 a month. How good is that to end a Friday? Like, I should just end this and walk off. That's great, right? Now, here's what's really interesting. As rates drop a 1/4 of a point increments, right? As rate drops a 1/4 of a point increments, something in the neighborhood of like 600,000 more people are in the money. And I'm actually going to go through the range and percentage. You're going to find it really, really interesting. So here's what I'm going to do. I'm going to, on this page, I'm on page 9, check it out. There's a wonderful chart. There's 2 great charts on this page. The first chart shows the number of mortgages in the money for a refinance under various interest rate scenarios. So I told you at 6.5%, there's 2.5 million, qualified borrowers in the money, right? At 6.25%, it's 3.2 million. At 6%, it's 4.7 million. At 5.75%, it's 6.1 million. And at 5.5%, 7.2 million homeowners would benefit from a refi. And these are homeowners that have at least 20% interest or 20% equity, 720 FICO score, and can improve the rate by 3/4 of a point. Is that incredible? Like, how good does the next 14, 18 months look like? Now, it looks great, but as I talked about yesterday, It's going to be a battle to win these refis, so let's go out there and do battle. But let's start by pumping up our energy and being just absolutely excited about the opportunities. We could use 7 million more transactions. Well, that would be awesome. And here's the thing, by the way. Some of these people, the ones that you refi at 6.5, you're going to refi again at 5.75, right? You're going to be able to bite at the apple a couple of times, which is just going to be fantastic. Now, in the chart below on the same page, page 9, it actually shows the interest rates outstanding by year originated, or what's considered by vintage. So you can check that out. You can see there most of the loans that are going to be in the money were originated 2022, 2023, and 2024. There's very little that are going to be really in the money from 2008 to 2021. But interestingly, there is a small batch of people that still have mortgages with high interest rates going back from before 2007, mainly between 2004 and 2007. But the real opportunities, people have gotten their loans the last 3 years. So I think that's super exciting. Now, let's talk about some other stuff. VA mortgages have been overly active. They've been much more aggressive in doing refis. In fact, VA streamlines have accounted for up to 25% of the overall refinance activity in the last few months. Really just interesting. Even though they're only 7% of active mortgages, they've been accounting for over 25% of the refis. Really, really interesting. That's good news. There's this whole report is great, but know this: there's an ocean of people already who could refinance, 2.5 million of them. And that's just the ones that are clearly well qualified. If you start to get outside of well qualified or the difficult borrowers or the ones more, don't have quite the advantage, there's a much bigger pool. And so my encouragement is get out there and talk to them. Get out there and talk to them. I know there's heavy competition, so put your best foot forward first when going out and talking to your past clients. Make sure you're following Phil Jones, What to Say. I listened to a podcast with him yesterday with Jeremy Forcier, Todd Bixman, and Dave Savage. It's always great. Listen to Phil, the word master. Work on your words, work on your value prop. Just make sure you're contacting these clients. Don't assume that you still have the relationship. Just the assumption is you have a heart to help and go and help people, and you're going to win. And I hope that you take this and that you start making calls today, and tomorrow morning. I know it's Saturday, but tomorrow morning. Let's make calls. Let's see if we can't get out there and get to these people. Similarly, purchase market is starting to heat up a little bit. It seems to me the front line of the purchase market is now at the open house. So let's start wearing out some leather on our soles of our shoe. Let's go out there and see if we can't get to open houses this weekend. Go see if we can help agents, go help people buy houses, achieve the American dream. And then when we get done with that, let's make phone calls about how we make the American dream more affordable and how we can help people lead to more wealth faster. Because remember, when you're doing a refinance, you're going to ask people 3 things. You're going to ask them, 1, hey, would you be interested in lowering your monthly payment and then using the savings in some other way? Or 2, would you be interested in lowering your interest rate and accelerating the time period which you pay off your home? Or 3, would you like to access some of the equity locked up in your home and still probably maintain the same payment? Those are 3 things that we can go out there and offer borrowers, and that's such a valuable thing. So with that, that's all I got, and that's plenty. 2.5, soon to be 3.2, and we're headed to 7 million. That is really exciting. I hope that excites you. I hope you have a great weekend. I hope you're wearing out the leather on your shoes. I hope you're going to open houses. I hope you're calling your past clients. Now is not the time to coast. Now is the time to double down. I wish you luck, and I hope to see you out there. Thank you. See you tomorrow. Bye.